YouTube fam, Fat Man Zoom here. I am excited to bring you our first pre-recorded options video. We got my man Don Fran from the Don Fran Show, our options specialist, to help me through this. Don, what's going on, brother?
What's up, everybody? Super excited to be here.
God, that beard's looking tight. I'm going to try to get through this, but I might lose focus because that beard is just properly curated, my friend. All right, so today we're talking about the options wheel strategy, and the one mistake to avoid. It's actually one that I've almost fell victim to, so I figured I'd bring it to the table. But first, let me welcome newcomers to Own the Chaos. The stock market is crazy and chaotic, and we've made it our mission to help you own it. And options have been crazy and chaotic, Don. We've decided that every week, Brad and myself are going to bring a new options video on our experience as we navigate through options. And I'm specifically focusing on the wheel strategy. Today, as an example, we're going to be using Clover because it is currently the one that I'm executing. So it's the best example that we can give because I can give my experience from it. But first, before we get into the mistakes to avoid, and make sure you guys stick around, let's just talk about just a quick overview of what the wheel strategy is. Don, why don't you explain it in a nutshell?
Okay, in a nutshell, we're using options to enter and exit. So we're selling puts to enter the position and then selling calls to exit a position that we like. Essentially, like collect. Sorry, something I always say, just kind of help people. Essentially, just collecting rent on the shares while we have them.
Yeah, I was hoping you would say that. And I love that analogy, is the rent analogy. And actually, something came to mind recently. I've been put onto Turo. So for those who haven't heard about Turo, Turo's is really cool ride sharing program. So instead of renting a car from a traditional rental car company, you have Turo, who you take your car, maybe it's sitting in the garage 5 days a week. Well, instead of you having this asset that's just collecting dust, you can actually rent it to other people and you're collecting a little bit of money. Now, you're not going to get rich off of it, but who doesn't want free money? So I like that rent analogy, and it really reminds me of how these websites like Turo enact. So it's similar in that way. And that's really why I got into it. I think, one of the things that we have to think about is the criteria for people to get into. And before I sort of discuss why I get into it, let's talk about which stocks. Like if somebody's considering a wheel strategy, what stocks, or like what are the criteria you would look at before you would implement the wheel strategy for a specific stock?
There's actually, quite a number of criteria, but to keep it, the one thing that really gets me thinking, like, why don't you just do this? Is when someone says, I would buy this with both hands. I'd back the U-Haul up if it got to that price. And then why wouldn't you? Why wouldn't you just sell that put at that price, collect that free money? And then, if it does sell off and get to that price, you got what you wanted. Like there you have it. Where's the U-Haul?
And let's remember that I'm new, so like always correct me if I say anything incorrect, but isn't it just like getting paid to set a limit order that may or may not get exercised, right?
Yeah, exactly. You could have a limit order there, or you could just sell that strike and see which one fills.
Yeah, so I have a limit order and I'm going to get paid for it. And, so I'm going to get it at a better cost basis. And that's the one thing that resonated with me. So when I looked at a stock, it's like, hey, Clove, for example, I could get into Clove at 10, but would I get in at 9? Is one of the things you said to me. So, I'm getting a better cost basis. And while I wait for it to hit, because we're using weeklies, I'm getting a little bit of cash every week. And as we know in the market, it's about incremental growth. And so incremental compounding, this is perfect for it. So I love that. And I think that makes a whole lot of sense to me. The one other thing I wanted to ask you about as far as this is concerned, so you have to really like a stock, right? Like you have to be willing to sit in the stock if it's going down. And then, so like if it goes down, you're actually, hey, I love this, right? So then the other thing to consider is, there's a capital consideration. So you have to be able to afford 100 shares. I think that's the basic expectation. Is that fair to say?
Yes.
And so you talk about a lot, if you have a stock that you'd be willing to scoop up with two hands, isn't that your famous line?
Yeah, it's because I hear everybody else say that. I don't know if I've ever used that line, but I've heard so many people say that. I'm like, well, let's just do it. Put your money where your mouth is. Let's collect some money.
Yeah. So listen, this isn't everything about the wheel strategy. This isn't every fine detail, but that's not what the point is. If you guys are interested in learning more specifically about the wheel strategy, go check out this video. Don actually breaks it down. So it's called Stock Options Explained. That can get you the finer details of it. So make sure you check out Don's channel, The Don Fran Show. But bro, let's get into it. This is what I care about. Is this mistake to avoid? I'm glad you told me, and I wanted to bring it to the Chaos crew. What is that one mistake that you see, especially new people to the wheel strategy, do, and how to avoid it?
Well, I'm actually glad you brought up the limit order, because everyone always says this strategy sounds too good to be true. It's free money and yada yada yada. But same risk as a limit order. You sell that put and it does fill, and it could just continue to go down. So let's just say right here, you thought that wasn't going to break that zone. You're a subscriber of mine. Yeah, this is Clove. You thought it's going to hold that zone. You sold the nines, and all of a sudden it got filled. You got exercised. So now you own those shares at $9 and it's down. Now your effective cost, like your average cost is going to be $9. So to exit, you would sell a call at that price or higher. And the trap is, as this goes down further and further, those calls are going to just lose value and lose value and lose value. So it becomes, we'll pull up the options chain. It just becomes not as attractive. So
yeah,
your average cost. This is the option chain for October 8th.
Well, let's use my position as an example just to make it clear. So I have 200 shares of Clover, and so I'm actually selling 2 contracts, and I'm staggering them. So I'll sell a call a week out, and I'll sell a call 2 weeks out, and I just rinse and repeat. So my cost basis is 1007. Let's use that as an example, because as it's gone down, because it's below $10, well, far below $10. I've actually faced this issue with the premium. So go ahead.
Okay. Okay. So as far as your cost basis is 1007, even selling the $10 strike, you're going to lock in 7 cents loss per share. So times 200, you have 200 shares. So you're selling the 1050s. So you're collecting $2 there. And then the next week you're collecting $6. And then someone's going to just say, why? Well, why not go, it's not going to hit 9. It's not going to hit 9. So why don't I sell, instead of collecting $2, I'll collect $5 and sell the 9. And that is going to be the problem right there. They wanted to collect that premium. If we just pull up the chart real quick, it doesn't have to be a pump and dump ticker either. This is just a great example, because Chamath might tweet. It might just hit the Wall Street bets section because it's got a high short interest. Something will happen. And if you could plan when this stuff would happen, we would just load up in calls anyway. You can't really predict these as much as people think they can. So effectively, you're going to lock in a loss because you wanted to collect a few more dollars, and you sold the $9 calls thinking it's not going to get above, even if you're subscribed to me, it's not going to get above that blue zone. I'll sell the $9.
Bro, I've experienced that. And that's what I've thought, because I don't think Clove's going to $9 next week. And so I'm like, you're tempted by those few extra dollars. But I think it's just important. And I have to remind myself, you know what? I'm just going to get a couple dollars, but I also need to ensure that whatever my strike price is, it needs to make sure there's profitability. So you got to need to make sure that is the base, because when you're operating the wheel strategy, the last thing you want to do is execute it perfectly and lose. And I think this is one of the mistakes that you just need to be aware of. It's one that I am tempted with and have almost fell victim to. So if you guys are interested in learning more about options, learning more about wheel strategy, we're going to be coming out with a video every week. We're going to be digging deeper into this. Don Fran's going to be with us the entire way. So I'm excited to have you guys on board, but let us know what you guys are looking at for the wheel strategy. What strategies you guys employ. Any questions you have, throw those in the comments. Let us know. Make sure you guys come back here. Don't forget to like and subscribe, and check out Don Fran at the Don Fran Show. His channel is in the description. But we'll see you guys in the next video. Bye.
Have a good one.